In the world of cryptocurrency, few events carry as much weight and anticipation as the Bitcoin halving. This process, which occurs roughly every 4 years, has significant implications for the entire cryptocurrency landscape, often triggering intense debates within the blockchain community. To truly grasp the importance of the Bitcoin halving, it is crucial to understand what it entails and why it garners such widespread attention and speculation. So, what exactly is the Bitcoin halving? The Bitcoin halving, also known as the halvening, refers to a pre-coded event that happens in the Bitcoin protocol every 210,000 blocks, roughly every 4 years. It reduces the reward miners receive for validating blockchain transactions. This process is designed to control the issuance of new Bitcoins and maintain its scarcity, thus ensuring a limited BTC supply. Essentially, the halving cuts the BTC rewards given to miners in half. Imagine you have a big jar of marbles, and every hour you give someone a marble for helping you with a task. However, you've decided that you want to make these marbles rarer over time, so you set a rule. Every 4 hours, you'll only give out half the number of marbles you did before. At first, the jar is full, and you're giving out lots of marbles. But after 4 hours, you have the amount of marbles you give out. So, if initially you gave out 10 marbles per hour after the first halvening, you'd only give out 5 marbles per hour. Then, after another 4 hours, 8 hours total, you have the number of marbles again. Now you're only giving out 2.5 marbles per hour. This process continues, with the number of marbles being halved every 4 hours. As time goes on, the rate at which you're giving out marbles slows down, making them more and more scarce. Similarly, in the Bitcoin network, every 210,000 blocks, approximately every 4 years, the reward for miners is halved. Initially, miners receive a certain number of Bitcoins as a reward for validating transactions, like receiving marbles for helping out. But after the halving event, they receive only half the amount. This process repeats, gradually reducing the rate at which new Bitcoins are introduced into the system, thus ensuring its scarcity and maintaining its value over time. The halving, therefore, plays a pivotal role in controlling the rate at which new Bitcoins are introduced into circulation, slowing down the production of new coins over time. The next question will be, what happens to your Bitcoin after halving? After a Bitcoin halving event, your existing Bitcoin holdings remain unchanged. The halving process doesn't directly affect the number of Bitcoins you hold. However, it can indirectly impact Bitcoin's price and various aspects of the cryptocurrency ecosystem, which is precisely why investors, traders, and crypto enthusiasts pay such close attention to it. Here are a few reasons why the Bitcoin halving is significant and why people should care. 1. Supply and demand dynamics. With the halving reducing the rate at which new Bitcoins are created, the supply side is constrained. This, in turn, affects the balance between supply and demand, potentially leading to shifts in the market value of Bitcoin. Basic economic principles dictate that when the supply decreases while demand remains constant or increases, the value of the asset is likely to rise. This anticipation of increased scarcity often leads to a surge in investor interest and speculation surrounding Bitcoin. 2. Market volatility. The Bitcoin halving has historically been associated with heightened volatility in the cryptocurrency market. Speculators and investors closely monitor the market dynamics leading up to and following the event, trying to predict its impact on the price of Bitcoin. This anticipation often fuels price fluctuations and increased trading activity. 3. Implications for miners. As the reward for mining new blocks is halved, the profitability of Bitcoin mining is directly impacted. This reduction in rewards can pose challenges for miners, especially those operating with higher energy costs and less efficient hardware. Miners need to assess the viability of their operations post-halving and adjust their strategies accordingly. This often leads to shifts in the mining landscape, with smaller or less efficient miners potentially being pushed out of the market while larger, more resourceful operations continue to thrive. 4. Long-term investment implications. For long-term investors, the Bitcoin halving represents a critical event that underscores the asset's deflationary nature and potential as a store of value. The predictable scarcity introduced by the halving mechanism positions Bitcoin as a hedge against inflation and economic instability, appealing to individuals and institutions looking to diversify their investment portfolios. The halving reinforces the narrative of Bitcoin as digital gold, reinforcing its appeal as a long-term investment asset with the potential for substantial appreciation over time. The fact is, the Bitcoin halving is not merely a technical adjustment. It's a fundamental pillar of the cryptocurrency ecosystem that shapes the narrative and trajectory of Bitcoin's future. As each halving event unfolds, it amplifies discussions around the intrinsic value of Bitcoin, its role in the broader financial landscape, and its potential as a transformative force in the world of digital finance.
Alright guys, give this video a thumbs up if you learned something new. Share and subscribe to encourage the work that we do. Don't forget to check the description below for our Telegram channel link, where we would be sharing fascinating crypto information. Till I see you again, stay curious and keep learning.